Thank you, Chair. So last December, Finance Department take by surprise many financial market participants by the decision to cancel the real return bonds issue. Will be the only G7, I think, will no longer have such asset class product. That product exists since the launch of 2% target by Bank of Canada in 1990. So it's a 40 years history here. So Canadian Bond Trader Association blamed Finance Department by lack of proper consultation, and Canadian Institute of Actuaries as well asked government to reconsider that. It's a different asset class, very useful tool. So could you share with us what was the rationale and the matrix you have used to take that decision? And have you open mind to reconsider that and launch a proper consultation, to use the expression Canadian Bond Trader Association?
Thank you for the question. Again, Graham Johnson, Financial Sector Policy. The Canadian Real Return Bond Program has I would say it's long been it could long be described as a relatively small, relatively illiquid program. Issuance was $1.4 billion a year. In the context of a gross borrowing program, of 100 and something billion in a lot of years. So it always was quite small, even in terms of its aggregate. It was small, quite illiquid in terms of trading. It was more of a buy and hold product, and as well, I think that by the nature of it, it led to a higher degree of variability in the government's interest charges. And I think those were the reasons that fed into the decision to cancel it. I would like to stress that we do recognize the importance of real and in-depth consultations with financial market participants. I would highlight the consultations that have been done around the Canada Mortgage Bond Program. Those were extensive, and I think provided the department with a lot of valuable feedback, and we are working any changes to that program. We will be working very closely with the market to make sure that's smoothly implemented. Similar consultations around the cancellation of the 3-year and similar consultations around any decision for Treasury bills. But
I understand it's very liquid. I have worked as a portfolio manager with the Canadian Insurance Company, but it is small but very useful. And in fact, it's not because it's buy and hold that it's not useful. So the point is, I try to read between the lines. Proper consultation, Canadian bonds, mortgage, but are you open mind to reconsider? Because at the end of the day, Bank of Canada mentioned that this is a finance department decision. That's it. That's all. And a lot of people taken by surprise. So is it something that you open mind to launch a more longer, deeper consultation process in the coming months?
I mean, I certainly, these are ultimately ministerial decisions, and I certainly can't speak for the minister, but what I would say is that the market should raise this issue with the department in future consultations. I'm going to suggest that it is very important for the department when it structures the government's borrowing program to take on board this advice. So yes, raise it again in future consultations and bring the discussion forward again. It's